Good evening and assalamu alaikum everyone. Sorry for the technical glitch. I welcome you all on behalf of ACFE Oman chapter in the webinar session Fraud and Sustainable Corporate Governance. Now, without any further delay, I will request our President, Mr. Jose Chaku, for welcome address. Over to you, sir.
Good evening, all. This is our first event in 2022. We were waiting to have a physical event to interact with each other. 2021 was a very good year for ACFE Oman. Even though we met personally, we have achieved many of our goals during the year. We could maintain the active members to 155 and could convince many of the graduate students to take the path of certified fraud examiner. Our members are our ambassadors. Another happy news I want to share with you is that we are planning to hold one-day physical event, adhering medical protocols and guidelines available. Our last conference was during 2019, and we couldn't conduct any major event due to the pandemic after that. The date of event is decided as March 16th, 2022, and will be conducted in the College of Banking and Financial Studies. Soon you will get the information about the event. It will be a full day event and will be given 7 hours of CPE credit. Everybody should attend that conference. We are also in the pipeline to form an Omani Anti-Fraud Association. ACFE Oman is one of the professional associations sponsored by the College of Banking and Financial Studies. We are expressing our gratitude to His Majesty, ministers and government officials to function our chapter. CBFS is giving us continuous support and guidance. Now, I cordially invite our past president, Mr. Davies Kalukaran, managing partner of TO Oman, for a few words. Over to Mr. Davies.
Hi, good evening, everyone. I see that we have very good participation today. Most of our members, although I could not see the list of participants, but I'm quite happy that this program has generated a lot of enthusiasm amongst our not only among the participants but among the our board also, because it's after a long time that we are meeting, and we have and the good news that we are going to have the one-day workshop on the March 16th, as Mr. Joe said, mentioned. Over the last 4-5 years, ACFE Oman had a very good growth in terms of membership, in terms of imparting intellectual programs, and the last one culminated in the 2019, where we had an excellent one-day program with government dignitaries and excellent participation from all industries and companies across Oman. That is a good event. And since then, because of the pandemic, the ACFE chapter was not able to convene in-person meetings, but somehow we had managed with quite a few webinars online. And our Selim is also here. He has been very enthusiastic in conducting a couple of programs on the webinar, and we have excellent board members now. Apart from Mr. Salim, we have Mr. Khalil Al-Rawahi. I hope he's here, and Fatia and Murad. It's quite some time since we have met them in person, but hope all of them are here. And with we have a dynamic team here now, and I'm sure that in the coming few months you will witness a lot of programs. Apart from the March 16th in-person one-day event, we'll have quite a few programs. And I'm quite happy to see Dr. Ali Rehman today. I mean, I have seen him on various occasions. I have listened to him also. the topic which he has selected today, I mean, it's a very unique topic. I googled and immediately your article or this is whatever it is, it came to me along with the Fatia. Yeah, both of you have done it, and you know it's a quite an extensive article. I had the privilege to go through it. It took some time to understand where you were going. You know, it was quite a good one. How you have, although I have some objection to some of your conclusions regarding auditors and audit opinions, and you know the role being played by the auditors. But it was an excellent article. How you have managed to put this sustainability of corporate governance along with the fraud, you know. So it's quite good, Dr. Ali. Good to be in touch, and I hope that you know we'll have a very meaningful section. We can meet afterwards. So thank you, and I wish everyone a pleasant evening. I hope that you know you will all be benefited out of this. Hassan, thanks a lot for facilitating this for me also. Okay, thanks Helen. All right.
Thank you so much. Thank you so much, Mr. Davis. Now I will request Mr. Salim for speaker introduction. Over to you, Mr. Salim.
Yes, so I'm glad to introduce the speaker today. Dr. Ali Rehman is a PhD holder in risk and governance. He is also FCMA, CIA, and CRMA. He's having more than 21 years of working experience in finance, corporate governance, risk and internal audit, and in building a strong control environment. He is a board member of IIA Oman and can be considered one corporate governance champion. Dr. Ali has written several articles which were published in renowned journals. His focus areas include forensic accounting, corporate governance, fraud, and ESG. Please join me to welcome Dr. Ali. Dr. Ali, the floor is yours.
Thank you very much, and thank you for all the introduction. Thank you, Mr. Jose. Thank you, Mr. Davis. Thank you, Mr. Salim. Thank you, Hassan, for all the support, and just really happy to just see a good number of people at this time of the night. I'll be just turning off the camera in order to just have the proper speed, and just please let me know that if you can just see my screen, basically.
Yes, sir. Yes, Mr. Ali.
Okay. The presentation mode is also can be seen.
Yes.
Yeah.
All right. Great. All right. Now we are just going to talk about the fraud and the sustainable corporate governance. Now the sustainable corporate governance is very much a talk of the town and talk of the day nowadays. Sometimes some people are just calling it as a ESG, environment, social, and the governance. But ESG is always comes under the umbrella of sustainable corporate governance. We will going to talk about what is sustainability, why sustainability is important, what is corporate governance, integration of sustainability into the corporate governance, what is fraud, how fraud is the threat for the sustainability, what is the role of the auditors, is there a missing link, and in the end we're going to talk about the recommendations. Many of the things that you might be already aware, you know, what is a fraud, what is corporate governance, but we're going to go through it. As I always suggest one thing, that we learn something, then we unlearn, and then we try to relearn. I'll try to just give my level best in order to just show you that what is the connection between the fraud and the sustainable corporate governance, and how the auditors or the forensic accountants can just do something about it. So what is sustainability? Sustainability refers to the situation which is not providing solution for the short term, but rather looking at the long-term scenarios. Achieving sustainability is not a one-man task. It's a joint effort which individual organizations and the government all are involved. And once they all are involved, they can just achieve and just go toward the sustainable corporate governance. In 1992, United Nations just presented one of the best examples, not the example, one of the best definitions for the sustainability. They said that development which meets the need of the present without compromising the ability of future generations to meet their own needs. It means what? That we have to work in order to meet our need without destroying the needs of our future generation. It means what? That we are trying to create a sustainability over here. Now, United Nations, they very recently, they just give the 17 goals for the sustainability. I'll just read them out for you. And this on the left side, you can just see, I hope this small screen of file is not appearing, or is it also appearing?
It's not appearing.
Okay, great. Right. Now, this picture on the left side, you can just see that it's a very famous picture for whenever we talk about the sustainability. So the 17 goals for the sustainability are no poverty, zero hunger, good health and well-being, quality education, gender equality, clean water and sanitation, affordable and clean energy, decent work and economic growth, industry innovation, reduce inequalities, sustainable cities and communities, responsible consumption and production, climate action, life below water, life on land, peace, justice and a strong institution, partnership for the goals. Now, these are the 17 goals which United Nations has defined for the sustainability, and now they are emphasizing all of the government all over the world who follow the United Nations agenda to have these sustainability goals, including here in Oman. And let me just tell you one thing, that each and every goal, just like no poverty or zero hunger, they are having their own set of standards, own set of criteria, that how they want it to be achieved, and how once you achieve that in a right way, you can proceed towards the sustainability. Now, one thing need to be just note down over here, that all these 17 standards have to be achieved. It's not something that you can skip one part and then you achieve 16 and then you consider yourself as sustainable. Now, very recently in United States, there were much talk was just going about for the racial discrimination. Now, we just talking about reduce inequalities. The sustainability also talk about the gender equality. In France, many of these things are just going on in many of the countries. I don't want to name the countries over here, but the point I just want to emphasize is this, that if you skip or are not able to achieve one of the goal, you cannot achieve the sustainability. In order to achieve the sustainability, these are the 17 very comprehensive goals, and if any of the countries able to achieve it, they will be working toward the sustainability. It's not sustainability, as I just mentioned in the previous one, that we should not look for the short-term goals, but sustainability forces us to look for the long-term provision of what we want to achieve. Now, there is no future if we are not going to think smart. Nowadays, we are having smart cities, smartphones, smart working life, smart everything. We start building the smart cities. We have the smart technologies. We have even a smart driver of changes. But nothing is workable if there is no sustainability. If you are not able to achieve the sustainability in your society, in your organization, in your culture, in your country, then no matter how smart you are going to go, it will going to last for the few of the years, and then it will going to create more of the problems rather than the solutions. Now, few of the examples, this is called the A to Z of the sustainability, which is again provided by the people who are working very close to the United Nations. Just like sorry, air dry the clothes, save bees, compost, forego the cubs, grow the garden, plant a tree, buy a quality, not a quantity, have a zero waste day, do your best. So these are the small examples and the small goals which the person can set by himself or herself, and they can contribute towards the sustainability. So as I just mentioned, sustainability is not a one-person task, but it starts from the one person at least. Let's say that if we start doing something, and if we are the leaders of the organization, we are working in the organization as the agent of change, then we can just automatically start helping ourselves towards at least following these aspects. We can teach other people about these aspects, and we can just proceed further towards the sustainability. Now, the thing is that whether you just, regardless you want to achieve the 17 goals of the United Nations, or we want to build a smart cities or shape our lives towards sustainability, what we need organizations. We need profitable companies. We need future-oriented leaders, and we need the cash-rich companies. Now, coming back to this one, just like 17 goals, we are talking about the no poverty. We are talking about zero hunger. Just tell me one thing, that if the country, they can provide, all right, there are certain socially responsible countries which are providing the joblessness allowance, they are providing the scarcity allowances, but again they need the organization to provide the jobs to the people. They need the organization to create the environment of the sustainability. So what we are just talking about, we are just talking about a cash rich companies. We are talking about the organizations to achieve, so that they can have work toward the no poverty, they can work toward the zero hunger, they can provide a good health insurance, so that it will be less burden on the country, and they will going to take a part into it. They build the schools, they build the university in order to achieve the quality of the education. So as I just saying, that no matter what, whether you want to achieve the 17 goals, you want to have a sustainable smart cities, you want to achieve the sustainability, but in the end of what we just need, we need organizations, because organizations are the pillar of any country, of any society. We need the profitable companies, because the loss making companies, unfortunately, they will not be able to achieve it. We need future oriented leaders. There are many leaders who are just thinking in an old same way, but again this is not going to help. We need the future oriented leaders. We need the cash rich companies who can just help towards the organization to grow, who can help the organizations to achieve the sustainability. Now as I was just saying, that in order to achieve the sustainability, what the companies need. So first of all, we just define that, okay, organizations are necessary in order to achieve the sustainability. Now, how organizations are going to achieve the sustainability? They should have a sustainable profit. When I say sustainable profit, it doesn't mean short-term profit, that let's suppose you are earning a net profit of $1 million this year, but you know for a fact that based on your future forecast, you will be in a loss for the long time. But only to just please the shareholders, what you are just doing, you are just doing something in order to get the net profit, which is above the budget or exact of the budget amount. But again, it will not be a sustainable one. So what the organization need to have, they should have the sustainable profit, and then they invest this profit into the sustainable growth, which is not the short term. They should develop the vision, mission, and the organizational objective which emphasizes on this sustainability, and they should also develop the policies and the procedures to achieve the sustainable mission and the vision. Now, sustainability improves the quality of our lives. Now it comes to this point that, okay, we talk about the sustainability. Now, why the sustainability is important? Sustainability improves the quality of our lives. It protects our ecosystem and preserves the natural resources for the future generation. In corporate world, in the organization's world, sustainability is associated with an organization's holistic approach, taking into account everything from manufacturing to logistics to the customer services. Now, once we just talk about the organization sustainability, and let's suppose if the organization start working on the sustainability, they should not think about the sustainability of the one aspect of their business. Now, let's say we talk about Nike, right? They are into the sports manufacturing goods. They are just into the production of the shirts, shorts, shoes, the balls, you just name it. They are into the everything which is considered to the sports. So in their manufacturing facility, they are having the sustainability. But when it's come to the logistics, they are utilizing the wrong means. Let's say I'm giving an example. They are just doing the smuggling. They are just utilizing the child labor. So what is happening? Okay, one part you are just having it, but the other part you are destroying it. And then also just providing the customer services. So it's all in all, it's linked to all in all of your organization. Now, there are certain organizations which outsource, for example, the logistics business that we manufacture, you go and distribute. Now, it is the responsibility of the organization to make sure that that logistics company to whom they have outsourced, are they following the sustainable practice or not? And whether the customer services they have just been provided, they are towards the sustainability or not. Now, going green and sustainable is not only beneficial for the company, it also maximizes the benefits from an environmental focus in the long term. Nowadays, if you, I will just going to discuss it in the further slides, that many of the banks and many of the investment companies and many of the credit rating agencies, they are looking for those companies who are towards the sustainability. They do not provide the loans to those who are not helping the achievement of the sustainability. And nowadays we are having the ESG loans, we are having the ESG facilities. Even the countries, they are providing the tax exemptions toward those companies who want to achieve the sustainability and want to achieve the ESG scenarios. Again, continuing that, why sustainability is important, it's provide the healthy habit for all. In long term, our society benefits from improved water and air quality. It will going to help us reduce landfalls and increase the renewable energy sources. Now, being committed to sustainability will reduce your carbon footprint and the amount of the toxins released into the environment, and we are going to help it make it safe. When we focus on sustainability, the entire world benefits and get to live in the clean, more healthy living conditions. It will also going to have a social impact. Encouraging the conservation of the natural resources deeply penetrates not only to the company standards and brand, but also to the employees and their families. If you make sustainability important in your business, you are bridging a deeply important conversation to the forefront of the consumer protection. The societal impact can reach far and wide. It's beyond anyone's imagination if we start working towards the sustainability, that how much beneficial it could be in the future. Now, talking about the sustainability, we just talked about the sustainability. Now, let's talk about the corporate governance. What is the corporate governance? Now, corporate governance is the collection of the mechanism, processes, and relations used by the various parties to control and to operate the corporations. Now, corporate governance, basically, it dwells around the mission, strategy, objectives, smart goals, and the vision. And the people who are involved towards achievement of the corporate governance are the board of directors and the related committees, legal and the regulatory framework, organizational hierarchy, monitoring and internal controls, transparency and accountability, policies and the procedures. So the corporate governance, what the corporate governance is just doing, corporate governance is defining the set of rules, basically, that how the organizations should govern. Now, the Capital Market Authority here in Oman, they provide the definition of the corporate governance and they provide the purpose and the aim. They say that the purpose of the corporate governance is to set out processes by which corporates are controlled and directed to create efficient enterprises, contributing to building a strong, transparent, and competitive national economy. Now, the aim of such a process is to mitigate any adverse impact on the national economy, the stakeholders, and the local community arising from failure to comply with the corporate governance best practices. Now, what is the message which is given by the Capital Market Authority over here? That if you are in a compliance with the code of the corporate governance, you will going to help organization not to fail and to mitigate any adverse impact that could have on the national economy and the stakeholders and the local community. So what this corporate governance is talking about? Corporate governance is talking about protecting the organization. Corporate governance is talking about protecting the shareholders. Corporate governance is talking about helping the local community by building a strong and a transparent and competitive national economy. So this is all in all for the corporate governance, what it's just going to do. Now, corporate governance is the system by which companies are directed and controlled. Sorry. Now, the corporate governance is the system by which companies are directed and controlled. The board of directors are responsible for the governance of their companies. The shareholders' role in the governance is to appoint the directors and the auditors in order to satisfy themselves that an appropriate governance structure is in place. Now, why the shareholders require this thing? Because they want to make sure that their money which they are investing is not going to go into the drain, basically. Just like many of the companies, just like the fraud that happened and the thing, I just always say this thing, the corporate governance exists since 1970s when the concept was just introduced. But it actually came into existence after the fraud of the WorldCom and the Enron, when the Sarbanes-Oxley's law just came into effect and they started drafting the codes of the corporate governance, and they say that now it is mandatory. In England, it's the Cadbury's report that comes into being. In South Africa, is the King's report, because these are the authorities that define the code of the corporate governance because of the few of the incidents that short-term vision of the board of directors, the short-term vision of the executive management lead to the disaster of the organization. What happened in return? The shareholders lose their money, employees lose their jobs. Imagine what happened to the family of the employees. So they did not impact the organization, they in fact impact the whole society. So the corporate governance, in turns, they are helping in order to save the society. They are helping in order to save the employees, they are helping to save the organization, and in the end they are helping the shareholders' money so that it's protected. And once you provide such an environment, then you can attract more of the investors, you can attract more of the people who want to join your business in a good faith. Now, as per the Capital Market Authority, the major constituents or the major players of the corporate governance are the board of directors, audit and risk committee, nomination and the compensation committee, executive or the senior management, internal audit, and the external audit. So now let's talk about the integration of sustainability into the corporate governance. We talk about the sustainability, that okay, what is the sustainability? Sustainability means that we have to create a sustainable environment, we have to create a sustainable situation which can achieve the 17 goals of the United Nations in order for to have a sustainable situation. We discuss about the corporate governance, that what is a corporate governance? Corporate governance is a set of rules and the principles. They are defined by the board of directors. Board of directors are appointed by the shareholders, and they are defined in order so that the companies can be protected, the employees can be protected, and the societies can be helped upon. Now, talking about in the same way, sustainability is talking about protecting the societies for the future. So corporate governance is also talking about the protection of the societies, definitely for the future. So the governance and the sustainability are inseparable. They always go hand in hand. Now, sustainability refers to developing a society where appropriate balance is established between these 7 scenarios, which are sustainable. You can say that where the appropriate balance is established between the environmental, social, economic, political, territorial goals, corporate governance, and the nature of the product. Now, above mentioned are known as the 7 dimensions of the sustainable development. Now, we talk about the 17 goals of the sustainability. Now we are talking about, then we talk about the corporate governance. Now we are talking about the dimensions of the sustainable development, that where the sustainable development is just going to have an impact on. It will going to have an impact on the environment. It will going to have a social impact, definitely economic impact, a political impact, a territorial impact, impact on the corporate governance, because you have to just change your governance practices in order, if you want to, if you are future oriented, if you are forced to just look for the future. And then in the end, the nature of the product, that what you are producing. Are you producing something which is healthy for the environment, which is healthy for the people, or you are cutting down the trees in order to build the buildings in which the people will going to live, but they cannot sustain because of the unhealthy environment. So again, the 7 dimensions of the sustainable development, it is the integration between the governance and the sustainability. I'll repeat again that what are the 7 dimensions? Environmental dimension, social, economical, political, territorial goals, corporate governance, and the nature of the product. Because why I'm repeating this, because we will just going to discuss this again in the upcoming slides. Now, continuing the integration of the sustainability into corporate governance. Now, the integration of all 7 dimensions of sustainable development can achieve a long-term corporate sustainability. However, several scholars perceive that economic dimension is the most appropriate because it provides financial strong point and also prevents organizational collapse that might occur due to the financial reasons. Now, here's the point to note over here: that sustainability wants organization to sustain. I think someone's mic is just on. So the point to note over here that sustainability wants organization to sustain and not to shut down, because sustainability creates an environment where the things sustain. They just go and go and go and for a very long time. Again, if we just put them into this thing that the integration of the all 7 dimensions of sustainable development can achieve the long-term corporate sustainability. We are just talking about the organization sustainability. If organization is able to sustain, then we just see, just like in the human resource, we always consider a policy that we should be able to retain our talented staff. We should be able to train our staff. We should be able to bridge the gap between the required knowledge and the available knowledge. Again, why we are just doing this thing? Because we want to achieve the long-term corporate sustainability. We want to achieve the economic situation of the organization in a way so that it can impact socially, politically, it have a positive impact on the territorial goals, environment, and also the nature of the product. So integration of all these 7s, they create a long-term corporate sustainability. Now, with regard to the corporate sustainability, it can be defined as the capability of an organization developed through its governance practices and economic development. Now, what is the governance practice? Governance practice is followed by the governance management as they are liable for implementation of organizational strategies, objectives, and goals. Now, all major constituents of the corporate governance are known as the governance management. Governance management constituents are the board of directors, audit and risk committee, nomination committee, internal audit, external audit, and the executive management. So basically, again, I'll repeat what is the corporate sustainability? Corporate sustainability is the capability of an organization developed through its governance practices and economic development. Governance practice is followed by the governance management as they are liable for the implementation of the organizational strategies, objectives, and the goal. And the economic development, at the time of the integrating sustainability with the corporate governance, organization should develop its strategies to create economic values so that the corporate governance become capable of identifying economic risk that can hinder or impair the organizational performance. Because if we just do not work towards economic development, definitely the organization will not going to grow. It's not something that we just think about the sustainability, but we also think about the sustainable profit. We should think about the growth of the organization so that the whole society grow with it. Now just imagine, I am working in Shirkia University, it's here in Ibra. Only because of this one economic activity, many of the economic activities have just started. It's a great initiative done by the government and the shareholders, but it just open up the hotels over here. The people are just coming. Many of the students are coming here. They are renting the you can say the apartments over here. The economic activities have started, and we have to just think in a future way that we are developing not only the students, we are developing the society over here. And again, it starts with the one person, then it goes to the whole of the employee, then to the whole of the organization, and then the concept should be built in a way that we talk about the sustainability even in our mission and vision and the goals. Nowadays, many of the people, they are just talking about the innovation. Innovation is nice, but if you're not able to sustain what the innovation we're going to do. So corporate sustainability can be defined as the capability of an organization developed through its governance practices and the economic development. Now, much emphasis is just being provided by the European Union towards the establishment and the implementation of the sustainable corporate governance. It is stated by the European Union. Now, this is the definition by the European Union. In the first, we discussed that in United Nations 1992 definition of the sustainability. Now the European Union is defining the definition of the sustainable corporate governance. Now sustainability should be further embedded into the corporate governance framework, as many companies still focus too much on short-term financial performance compared to the long-term development and sustainability aspects. Now this is the initiative which has already been taken by the European Union, and all of the European Union countries, they are following it. They are embedding the sustainability, they are integrating the sustainability into the corporate governance framework. Now, following are the 7 principles of the sustainable corporate governance, which are defined by the European Union, and these can be followed by our CMA as well. these can be followed by your organization if it has not been enforced by the CMA. Now, what the European Union says: align a long-term interest of the senior management, shareholders, stakeholders, and society as a whole. Integrate stakeholders' interest, sustainability risk, dependencies, opportunities, and adverse impact into the strategies, decisions, and oversight. Create legal certainty enabling organization to identify, assess, and mitigate adverse impacts. Develop corporate governance arrangements regarding directors' remuneration and the corporate bonus schemes. Empowering corporate directors to integrate wider interest into the decision and enhancing existing corporate governance mechanism. Implement non-financial reporting directive which will assist organization to disclose information about their risk and impacts. Implement SCG strategies, sustainable corporate governance strategies, through the proper risk management and impact mitigation procedures. Now, these 7 principles, if you take it as is and put it in your corporate governance codes that you are having in your company, trust me, you will be taking the first step towards the sustainability. Because not only once you just do this thing, you will going to report it in your annual financial statements. Your shareholders will just going to know. The stakeholders which are associated with your organization, they will going to know that, okay, this company is working on this way. It means that they are working towards the sustainability. They are not thinking about the short-term situation. And again, as I just mentioned, sustainability not only impacts the organization, it impacts the society, its environment, the whole world as a whole, basically. Now, sustainable corporate governance creates a competitive advantage for the organization toward their increase in the market share and also assist organization in avoiding the risk, including the fraud risk. Corporate governance sustainability also assists organization to avoid corporate corruption and negative externalities. In order to avoid the corruption, negative externalities, and the fraud risk, organizations require the involvement of the board of directors and other governance management activities, as they are ultimately responsible for the fraud-free environment and providing satisfaction to the shareholders. So where we are just saying that sustainable corporate governance will just going to provide your company an edge over your competitors. It will just going to increase your market share. Plus, it will also going to assist you in reducing the risk, which also includes the fraud risk. And board of directors, definitely they are the one ultimately responsible towards implementation of the policies and the procedures. So they should be just taking care of it in the mainstream. Now, what are the risks which are related to the sustainable corporate governance? Now, when assessing the SCG risk, organizations should think beyond the traditional reputation risk. Now, the thing is that we have to think outside the box. When we think about the risk, we talk about strategy risk, reputational risk, financial risk, operational risk. Now, we have to just think beyond the traditional risk approach. We have to think about the sustainable corporate governance risk. Now, issues and malpractices related to the sustainable corporate governance can pose environmental, compliance, financial, and reputation risks that can severely damage the company, because if you are not able to identify the risk which is impacting your sustainability, it will not going to impact your reputation only. It will going to have many of the impacts, which is the environmental, compliance, financial, and you just name it. Now, for the banks and the insurers, the financial risk of the climate change are in sharp focus as the regulators set out expectation for stress testing, sustainable corporate governance disclosure, and the climate risk management. Now, as I just mentioned before, that many of the banks now they are emphasizing to give a loan or finance those companies who are working towards the sustainability. They are, you can say that they are reluctant in providing the loans or the facilities to those companies who are destroying the sustainability or who are not working towards the sustainability. Just imagine if you are a bank and you are the chief credit officer. Something comes in front of your table with a business proposal which says that, okay, they are providing something that we are not going to earn the profit for the next 10-20 years, but we will going to help the society and which will going to impact the climate as well. Whereas there is one company which is applying for the loan in order to build a coal refinery or a coal, you can say that a machinery which produces the electricity. Definitely a coal producing electricity company will be just hurting the environment a lot. There will be the pollution, there will be many of the adverse situation. And previously the banks used to just do this thing because in short run these coal electricity manufacturing companies, they post a huge profit. Huge profit means they will also going to get the huge interest. But once you look at the future of it, it's not sustainable. So now the banks and the insurers, they are also looking towards this aspect. Now the asset and the fund managers are being required by the regulators and the investors in the other countries to embed sustainable investment throughout their business and to consider the full spectrum of sustainable corporate governance. In European Union, it already started. Many of the countries, they are thinking about it. Hopefully, we are going to have it over here as well. Now, few of the risks of the sustainable corporate governance in terms of the environmental, social, and the governance aspect. The environmental risk can be the climate change and the GHG emission and the water security, the waste, pollution, deforestation, and loss of biodiversity. The social risks are inequalities, diversity and inclusion, employee relations, health and safety, and working conditions. From the governance aspect, there could be the risk of the executive remuneration, board diversity and the structure, donations and the political lobbying, bribery and corruptions, policies, and the standards. These are the typical risks which are related to the sustainable corporate governance, and this should be looked for in your risk assessment once you are just doing it. But it's only possible if you implement the sustainability and in your organization and integrate the sustainability in your corporate governance, making it a sustainable corporate governance. Now, what is fraud? You all are the members of the ACFE. Definitely, you just the thing that everyone knows that you guys knows about the fraud. But I'll still say that global economic activity has never been subject to such a rapid and the widespread disruptions and the fraud as the organization is experiencing today. As per the CFE report to the nation, every year there is an increase in the level of the fraud. I did not present the graphs and the bars over here because I'm sure that every one of you are aware about the report to the nation. But we know for a fact that the reported fraud is just increasing every year. Now, such situation has never been occurred before in the modern history. Now, it is reasonable to expect a wide range of economic and the risk outcomes as the world adjusts to the new normal. Definitely, there is a book called The Fraud and the Fraud Risk Assessment written by the Singleton and the Singleton. There is a very famous quote that they just mention over there that the people steal when the days are good and the people steal more when the days are bad. So in terms of this pandemic that we just had in the last 2 years and still currently going on somehow, and I don't know till when it will going to go on. But what will just going to happen that the people are adjusting to the new normal. So there will be definitely economic risk. Many of the organizations are closed. And if you really see why these organizations are closed, because they do not have the sustainable pattern. If the organization is working toward the sustainability, they could have survived. But since there was no sustainability pattern, they were looking at the short-term profitability, the short-term operations. One of the risks comes and they just close down. Now, it is likely that some organization will succeed, some will return to the pre-pandemic level of the business activity, and some businesses will not be able to recover at all. Again, those businesses that are not able to recover, is the major problem is just towards the sustainability. Now, today's risk executive need to be more than ever to be able to assess the fraud risk in the real time so that they can make efficient, sensible economic decision while optimizing the strategies and preventing the fraud. Now, fraud can be defined as an illegal action conducted to earn the gain or damage the organizations via disguised actions. Fraud is divided into the 3 major categories, namely the corruption, asset misappropriation, and the financial statement fraud. The corruption and the financial statement frauds can be categorized as internal fraud, and the asset misappropriation, which is also known as the occupational fraud, can be considered as the internal and the external both. Now, this is again from the report to the nation that the global cost of the fraud is over USD 3 billion with average loss of per case of 1.5 million. Now, Any organization can be victimized by the fraud at any time. Now, many of the people think that, okay, fraud never occurred in my organization. In this scenario, there is a possibility that either the fraud happened in your organization and you're not aware, or if your organization is really well, then be sure there will be a fraud very soon. The organization can be victimized of the fraud at any point in time. Now, in a busy organization or for the successful managers, unfortunately, fraud is not usually at the top of the priority list until and unless it strikes. Whenever you talk about the fraud risk, leave the fraud risk. We have many other things. There is no way that we can be just encountered a fraud. Just like Nabil Biscuit that happened, the 70,000 Omani Riyal last year, or I think 2 years back here in Oman. It was a masking fraud, a same old fraud which is going on from the decades and the decades, and the company got stuck in it. They had, if you really see the Nabil Biscuit, they have really loyal employees. They have a good employees. They have a good board. They have a good relationship with their stakeholders, with their vendors and everyone. But they became the victimized. They got victimized because of the masking fraud. Someone put that email of the vendor and just took the 70,000 riyals from them. Now, why it happened? Because it is easy for the fraudster to succeed because they are able to pay attention to details, exposing weak areas of controls and catching the unwary victim by surprise. Now, in fraud, the details are always concealed and the majority of the organization are reactive instead of proactive and act after the fraud happened. Now, fraud, contrary to the popular belief, isn't primarily the result of the dishonest employees, but increasingly involves senior managers, vendors, suppliers, competitors, and can be committed by the extensive collusion, just like in the case of the Satyam computers, deception, bribery, false reporting, and technological abuse. These are the very few to just name that how the fraud can happen. Now, the fraud, which is defined by the International Standards on Auditing, ISA, they say that an intentional act by one or more individual among management, those charged with the governance, employees, or the third parties, involving the use of deception to obtain an unjust or illegal advantage. Now, fraud is an intentional act because unintentional is error or mistake. It has to come with the intention. Now, fraud, as we just mentioned, that it can be further divided into the internal fraud and the external fraud. Now, a significant number of the fraud scheme involve asset misappropriation, where employees stole or misused the employee's asset. The costliest type of the fraud is the financial statement fraud, which involves intentionally misstating or omitting the company's financial statements. And corruption includes the wrongdoing such as conflict of interest, bribery, and the extortion. Okay, let's discuss a few things about the Volkswagen diesel fraud. I'm sure many of you might be aware of it. What happened with the Volkswagen, it is that they were able to develop, the thing is that in United States, they have a very strict rule towards the diesel engine, and they only allow those engines which are having the less carbon emission. So Volkswagen was just facing difficulty to sell their cars into the American market, because whenever they just go there, they perform the test and they were rejected. So what Volkswagen did, they think outside the box. They develop a tool that whenever you test it in a laboratory, it will going to show a less carbon emission. But when it goes on the road, it shows the more carbon, it really have the more carbon emission. So this is how they were just thinking. Again, if you just really see, it's a short-term approach. They want to penetrate the market, in which the board of directors were involved, the CEO was involved, their tech people, technology people were just involved, and they just devised a thing called turbocharged direct engine diesel engines, and they just develop a tool so that it can be just saved. Now, Volkswagen deployed this software in about 11 million cars worldwide, including 500,000 in the United States in the model year 2009 to 2015. Now, we are talking about 6 years. For the 6 years, till the time they were not detected, they were just continuously doing it. For the period of 6 years, till the time they just got caught, and then they just, let me just stay here in the screen. Okay, now the point to note over here, 11 million cars worldwide, 500,000 in the United States. So in the 6-year time period, what do you think that how much could be their net profit with this one, with the 11 million? I think as per my auditing knowledge concern for the automotive companies, it will be around more or less 10 billion or so. Sorry, just hold on for a second, please. Okay, I've just been reminded that it's 8 p.m. Okay, I'll just try to conclude it as quickly as possible. Since just give me 15 minutes or so, please. Thank you. Now, Volkswagen, they just have just around 10 billion profit or so within the period of 6 years. Now, what happened basically? Regulators in the multiple countries began to investigate the Volkswagen. Volkswagen stock prices fell in value by the third in the days immediately after the news. Volkswagen Group CEO resigned, and head of the brand development of the Audi research and the development head and the Porsche research and the development head were suspended. Volkswagen announced, now here the point to note over here, that Volkswagen announced the plan in April 2016 to spend 16.2 billion euros, 18.3 billion US dollars on rectifying the emission issues and plan to refit the affected vehicle as part of the recall campaign. Now in January 2017, Volkswagen pleaded guilty of the criminal charges, and they were slapped with a fine of $2.8 billion. So all in all, we are talking about, because of the short-term visibility, short-term visualization, they had to pay $20 billion in fine, and plus their shareholders also suffered, their vendors suffered, and everyone suffered basically. Now, the Wells Fargo, one of the very famous banks, I'll quickly go through it. What the Wells Fargo was just doing, they are just creating the fake transaction for the customers. For example, you just go to the bank, you want to open a bank account, they ask you, sir, do you need a credit card? You say no, they will say yes. In fact, they just give you the loans as well. And they were just opening the bank account. Let's suppose once they just write, they ask you, okay, what is your, please give us, the know your client form, in which you have to write the name of your parents, your wife, your kids, and everything. So they just open the accounts from their side without the people knowing it. And what happened is this, if you just see over here, this is their profitability chart, the 3 years, 5 years, 10 years, and these are the rest of the banks. The Wells Fargo was on the top. And relationship between the returns and the volatility, the Wells Fargo was again on the top. Why? Because they are just thinking short term and not towards the sustainability. And then they were just being obliged to pay the fines. And imagine that they just had more than 500,000 fake accounts. They were having the opportunity. They were having the pressure, because the branch managers, they were pressurized to just do these things. Otherwise, you will be just going to be fired. Their bonuses were associated with it. And now you all know for a fact that when the opportunity and the pressure is available, the rationalization comes automatically. And based on it, they just start having the fraud. Now, the Formosa Plastics. This is a company which has just been there in America, and they are just having a toxic situation. Their lakes have just been turned into the plastic. And even just imagine that the Louisiana facility is proposed for the low income predominantly community, and they are known as a cancer alley or a death alley, because everyone who is living in the vicinity of where the Formosa plastic company is there, they are sick. Just imagine that the pollution which is coming is 3.5 tons of the coal power being exploded every year. Now the plastic company is said to pay the 50 million fine towards the settlement of the water pollution, and there are many fines that they're just being slapped for. And what they are just doing, and this is another example of the slap, which fine that was just slapped on them. Now, recently attention has been paid to the corporate culture, tone at the top, and the impact that these have on the organization's outcome. While corporate leaders and the outside observers contended that the culture is a critical contributor to the employee engagement, motivation, and the performance. Now, I'll again go through this slide that we just discussed before, that the governance and the sustainability is inseparable. And the 7 dimensions are environmental, social, economical, political, territorial goals, corporate governance, and the nature of the product. Now, if you see that 3 fraud that we just discussed, the Volkswagen company, the Wells Fargo bank, and the Formosa plastic manufacturing. Now, what is the type of a fraud? If you see that the fraud can be categorized under the environmental. They were conducting an environmental fraud, the social fraud, economic fraud, political, territorial goals, corporate governance, and the nature of the product fraud as well. Now, who are involved? Definitely the management was involved. The board was involved in all three cases. And who are impacted? The people who are impacted. Environment was impacted. Earth, ozone, you just name it. So what they are doing, they are just destroying the sustainability by committing a fraud. And trust me that there is nothing else in this world that can distort the sustainability in the organization other than the fraud. If the fraud occurs, it means that the company is just thinking in a short term. It means they're not talking about the sustainability, and definitely it will just going to occur again and again. Now, again, coming back to this slide, Volkswagen fraud, they impacted all the 7 dimensions of the sustainable development. Wells Fargo impacted all the 7 dimensions of the sustainable development, Formosa, and there are many companies like this. Now let's talk about the internal audit. Now, in the role of the internal audit is just very specific. But the problem is this, that the International Account Auditing and the Assurance Board up till now, they did not issue any kind of the standards. Now, there is a organization called Sustainability Accounting Standard Board, SASB. SASB Foundation was founded in 2011 as not-for-profit independent standard setting organization. The SASB Foundation mission is to establish and maintain the industry-specific standards. Up till now, they have issued the 77 standards relating to the 77 industries. Now, the question to be asked by yourself that, and I'm sure your company just falls under this category. If you want to adopt the sustainability standard, sustainable corporate governance standard, you can go to their website and you can check and you can start implementing these. Trust me, it will going to enhance your value in the organization, that you'll become a trusted advisor. It will going to enhance your organization performance as well. Now, internal auditors can just help in many ways, just like in many ways in answering the question, just like, do we know who the company stakeholders are? Do we have a clear view on the sustainable corporate governance? Do we have a proper sustainable corporate governance culture? And do we measure our sustainable corporate governance activities or not? Now, this is something which is developed by the KPMG, that how the internal audit is involved towards all these things. They are just talking about, in order to have the ESG culture, the sustainable corporate governance culture, internal audit are just involved in the policies, culture and the awareness, the tools and the data, auditing and monitoring, issues management, reporting, high level oversight, and the sustainability. And these are the areas in which internal audit can help. I'm not going to go into the detail of this one. I'm sure the presentation will be shared and you guys can just go further into it. Now, why I say that the missing link is the forensic accounting. Now, the external auditors, let's talk about the external auditors. External auditors, since they do not have any kind of the standards, so they say that, okay, we cannot provide any opinion because there is no standard available. Now, internal auditors are looking for the governance, risk, and compliance. However, they are, and it is written in the IPPF, that they are not expected to have the knowledge of that person who is responsible for the detection of the fraud. Now, in this scenario, who will just going to do the work? Who will just going to help us in protecting the fraud from the 17 elements which are provided by the United Nations? Who will going to help us in providing the preventive or the detective controls towards the sustainable corporate governance? That missing link is the forensic accounting. Now, forensic accounting and the forensic auditing is an emerging profession who is looking after the risk which can distort the whole organization. Unfortunately, forensic accounting is not given much importance and are not considered to be the part of the audit team. Forensic accounting are always just being, called in as and when required. We discussed it before that any type of the fraud that happen is detected minimum 10 to 16 months. If we have a forensic accounting in our organization as internal audit team or as a separate part, they can be working 24/7 towards the detection of the fraud and in a real time, and they can also assist in developing the controls and to prevent the frauds, because they are the fraud specialists. They are the forensic specialists in the forensic accounting terms. Just imagine, we have sustainable corporate governance, merge with it the forensic accounting. It means that you are working towards the sustainability which is a fraud proof. We established for a fact that the fraud is the major thing that distorted the organization, which distorted the sustainability corporate governance. Unfortunately, forensic accountants are still not visible in the organization, but once you have it, you will see that how things start changing. Now the recommendations. In the end, as I just mentioned, that investor interest in the sustainable finance has grown exponentially in the recent years. Some credit rating agencies have sought to become more transparent as how sustainable corporate governance factors are integrated into their credit ratings. Now, to ensure a consistent level of the transparency for the investors in the SCG issues, on March 30, 2020, European Securities and the Market Authority, just like CMA over here, they have ESMA over there, begin to apply the guidelines for how and when these credit rating agencies consider for the sustainable corporate governance factors, and they are disclosed in the press release. And it's really amazing that more and more companies are just going towards it. Now, for the further recommendation, now this is my personal recommendation. I am sure if you can adopt it, it can help your organization. We need standards which talk common language and to be enforced by the Capital Market Authority. And this I have written in many of my articles which are published in the journals. We need forensic accounting to be the part of the permanent feature of organizational governance. We need organization to adopt the policies or develop the new policies catering the 17 goals of the sustainable development. Now, boards, including the audit committee, should consult with their relevant stakeholders and consider their interests as part of the board decision making. It's not a board decision. They have to just think broader way. Integrating sustainability consideration into the company's strategy and the operations. And the last, the audit committee should review their composition and assess their skills and experience regarding the sustainable corporate governance. Now, this is for the further reading. If you are interested, you can go towards it. And this is all from my side. Thank you very much for listening to me. I just took 15 minutes more of the time, but I hope that I was able to clear my point, and I hope that I was able to give some new knowledge. Thank you very much.
Thank you so much, Dr. Ali. It was a very wonderful, informative session, and there's a lot of takeaways from this session. There are a few questions from our members.
Sure.
First question is, what are the contributing factors to the sustainability for the firm or individual?
See, the contributing factors. Now let's talk about contributing factors first for the organization. Organization can contribute starting towards thinking for the future use and not for the current ones. Now let's suppose if we are just talking about, again, for the Volkswagen company, they were just thinking in a way that we were just going to earn the profit within the period of no time. So they start doing these kind of the tricks so that it beats the system, and in the end they just suffer. So let's suppose if there is an employee in the organization, he could be the part of the whistle. If he knows that, okay, this is something which is, okay, not a fraud, they're just not doing a fraud, but this is something which is going to impact the sustainability. They can work as a whistleblower, they can inform to the authorities, they can form a policy. So the individual part comes towards the forming of the policies for the organization, and for the company is to develop themselves towards the sustainability.
Thank you so much. The next question is, first, the appreciation. Thank you so much for the wonderful presentation. Since there is a significant mention of sustainability integration at the corporate world, there is also greenwashing, which is something that I'm sure ACFE is looking to mitigate. What are the screening processes used as a tool to assess whether the organization is really sustainable or engaged in greenwashing?
Okay. Now, I always say this thing that let's take one step at a time. For all the public listed companies, it's impossible for them to operate here in Oman if they don't follow the codes of the corporate governance given by the Capital Market Authority. Now, this is the minimum requirement which the CMA is looking for. As we just discussed, let's take first step at a time, that if we are having those 17 goals or those 7 dimensions of the sustainable corporate governance, and if we are able to integrate them, if we are able to include them into into our corporate governance, we're going to have a sustainable corporate governance. Now, in order to know that whether the fraud is occurring in this one, because once you have the sustainable corporate governance developed, not the corporate governance, I'm talking about the sustainable corporate governance, you will start thinking about the risk assessment accordingly. You will start going to just look for the risk which are highlighting the sustainability, which are going to impact your organization's sustainability. These are the areas in which the red flags will automatically going to come out, and you will be able to identify that where is the loophole, who is creating it, and how it can be stopped.
Thank you so much. Due to time constraint, we will take one more question. Banks are normally penalizing low salary account holders for non-maintaining minimum balance at their accounts and distribute it as a bonus to their employees. Is it a manipulation to sustainability?
Definitely it is. Because what you are doing, you are not creating an economic environment in which the people are able to sustain. Imagine that you are just putting a penalty on that person. It's not only one person, it's the whole family. You don't know how much he is just suffering towards it. And by just making a small contribution by the bank, let's suppose they just say that, okay, now the minimum balance requirement is just gone. It's a small feature for the bank, but how much it will going to impact the society. So definitely they are just doing it. It's a manipulation for sure.
Thank you. Once again, the requested last question. How far it is practically possible to implement the suggested approach, especially under the present difficult times where most of the organizations are suffering economically due to pandemic situation?
Okay, now I think I 100% believe that this is the right time to implement this thing. It's not difficult at all. Because why the companies are suffering because of the pandemic, as I just mentioned, that they did not think about the sustainability. They were just surviving in the phase of the time, or I just say they were just going with the flow, that they're just thinking that just going, and nobody anticipated that such thing can gonna happen. Why nobody anticipated such thing gonna happen? Because the people who are just doing a risk assessment, they never thought about it. They never thought about the sustainability. They never thought about how we are going to run the business. Now, many of the people just call it a business continuity plan. Business continuity plan, again, it tells you that if something happened, how we are going to continue our business. But once you start taking the risk from the sustainability point of view, you will not only think about how we are going to continue our business in such a situation, but you will be having multiple resources of the financial income. You will be supported by the multiple resources. Imagine if you are being supported by the society in which you are working. Imagine that you are being supported by the employees of the organization because they feel that you are working towards not only the sustainability of their for them, but for their children and for the generations to come. Once we are able to develop this thing, the whole of the society will going to help. And again, many of this is the right time to do it, because if we are able to do it now, we do, just like I was reading about the Bill Gates yesterday. He just mentioned that soon there will be another pandemic coming in the next 3-4 years. So if we start the sustainability now, might be we will able to cross that part again.
Thank you so much, Dr. Ali. It was a wonderful session, and there are a few more questions, but we will take through your feedback through email. Now, before we wrap up the session, I will call Mr. Jose for any further announcement. Over to you, Mr. Jose.
Dr. Ali, it was an excellent session. Thank you so much. And I think you have given a lot of value addition today to all the members. And I think I am seeing almost 90% of the people are throughout the session they were attended, and no dropouts. That means it was an excellent session, right? So thank you so much. And hopefully you will be distributing that PPT.
Sure, I'll do. Yeah.
Okay, and those who have joined late for the session, one announcement is that we are going for a one-day session, ACFE one-day conference, physical event on March 16th at College of Banking and Financial Studies. So I think I am in advance. I'm giving a notice. It is on March 16th, full-day event. Soon you will get the intimation on that. Thank you so much, and good night all.
Thank you.
Yeah.